Oh, hello everyone, and welcome to today's webinar looking at the Forex market. I've got some charts up on the screen, as you can see, but before we start, as always, as you know, let me go and find it here. There we are. Where is it? Yes, we have to quickly look at the disclaimer, which has to start all our sessions. As you know, trading can be a very risky business. Doesn't matter whether you're a retail trader or a multi-billionaire. So please don't ever use money that you cannot afford to lose. There we are. We'll talk about a little bit about what's been happening in the broader market. I'll just touch on it in this session, but we'll be looking at it more closely, certainly when we do the session on the indices, and certainly with stocks, which comes up later today. We've actually, the webinar where we used to do indices and stocks, we've actually chopped it into two with a little break in the middle. So the second half is just stocks and the first half is indices. Right, so here we are. Forex market. Yes, we've done the disclaimer very quickly. For those of you who may be coming along for the first time, we'll be looking at the charts through the prism of what we call volume price analysis. We'll be looking at the price action and the volume, see how they interact, see what's happening with that interaction to basically determine whether what we're seeing on the chart is genuine or not. And this doesn't just apply to Forex, but particularly this is where we started with Forex, this concept, if you like, of looking at the chart, which is a technical analysis, but also considering what is happening on the fundamental side, that's the releases, and also what is happening in the related markets, because all markets have, you know, these relationships. They have internal relationships and they have relationships with each other. So you have the four capital markets, and it's the interplay of those relationships which can also influence what is happening on the chart that you see in front of you. Now, sometimes the price action is what's called baked in, as it were, that you know, things that have happened not immediately, but maybe sort of a few weeks, maybe months, have gradually been you know, priced into the price action. And really, it's looking at that's sort of quite a subtle way of looking at the price action, because as day traders, we just look at the immediate impact, if you like, of releases, of maybe unexpected news. You have knee-jerk reactions in price actions, but there's also a kind of longer term influence, if you like, on the price action, and that's where the related markets come in. That's what I'm trying to say. I'm going to talk about that a little bit more in the stock session, because the market that we should all be paying very close attention to at the moment is the bond market. But as I said, it's something I want to talk about later. With volume price analysis, it's obviously volume and price, it's candles and candle patterns, and obviously support and resistance. So we look at support and resistance, price-based and also volume-based support and resistance, and you can see that on the charts when we bring them up. Then on top of that, we add on the indicators, and those of you who have already invested in our quantum tools and are part of our quantum education program will know that we've actually developed proprietary ones. But you know, you can blend and you can mix and match, but you really start at this level here, which is your foundation, as it were. And finally, the indicators that we have developed specifically for the Forex market, because it's a very I'm not going to say very unique market, because that's rubbish. It is a unique market in as much that we're looking at flows into individual currencies, and then that currency then matched up in the various pairs. So what these indicators do is they break down those flows for us individually, and it pairs them up to see which are the strongest pairs, which pairs aren't particularly moving, and you know, you help you not only to choose the most likely, a pair that is most likely to deliver some kind of move for you, or you can use it to monitor perhaps pairs that you have pre-selected, as it were. Maybe you like to trade, I don't know, British pound, and in British pound you like to look at pound Swiss, you like to look at pound yen, you like to look at maybe cable. You have, those are your three preferences, as it were. And what these indicators will do, it will tell you what, not just what the pound is doing, but what those individual pairs are doing within the pound matrix. Again, much better to see what what these indicators can do actually in the live markets. And finally, the education program, in case you've not come across it before, it's at quantumtradingeducation.com. As you can see there, there's another element that's been added to the program. So not only do you get the program itself, you get all the indicators, but you also have the opportunity to be part of the funded program. This is where you'll be allocated a certain sum of money and you trade it, and it's not your money, so there's absolutely no risk to you. Now, getting back to what I was saying earlier about the selecting suitable pairs for trading and what is happening, and I've actually brought up here taken this from a chart perspective, and that is using the dollar, because this morning, go back to the matrix, the CSI matrix here, let's stretch that out a bit more. I just wanted to, this is the dollar index based on the Dixie index. This is on XM. Some brokers will offer you this and some don't, but XM just happened to offer it, so I've got it here. As part of the quantum tools, we have actually developed, there is a dollar index, there's a pound index, there's a euro index. So in case you haven't got access to these indices, the individual currency indices, they are part and parcel of the quantum tools. But the reason I just reduce that down, I really wanted to see, it's a horrible chart, I know, but I really wanted to see what the dollar has been doing in terms of slightly longer term levels, because the narrative at the beginning of the year was very much this was going to be a sell on the dollar, and in fact I think dollar shorts at the CFTC have been at phenomenal levels, but they've all now been smoked, as it were, and the dollar has been, as you can see here, has been climbing. And as I said in one of my posts, it's actually been climbing since the Georgia runoff for the Senate, when it was confirmed that the administration in Washington would be completely Democratic, as it were. And historically, again, as I mentioned to our traders in the VPA room, historically, statistically, when there has been a Democratic administration, the dollar has actually strengthened. And so that's just something to be aware of, and it certainly seems to be playing out at the moment, and has certainly caught a lot of the shorts quite badly. I think they thought this is only just going to be a bit of a short squeeze, but in fact it's been moving high. Now it has had a bit of a pullback today, as we can see here on the hourly CSI. So what is this individual indicator telling us? What is the market? What's the market doing at the moment in terms of flows into individual currencies? Well, we can see there's been some nice buying of the British pound. The main one, as I said, has been the sale of the US dollar. We can see here this turn down on the levels. This is the move higher that we've had off this level here. This is yesterday's candle, big up candle. You would almost expect, after such a big candle, you would expect some kind of reaction, some kind of correction. The issue then is, well, actually, will that deliver a tradable trading opportunity? And this is where you then we have to decide, well, we know the dollar is being sold, well, where's it being sold the strongest, which is what is going to deliver, as I said, a half decent trade. And this is where the matrix comes in. We can see here cable has been there's been a very nice move in cable. Euro dollar, not so much. And these what we've got, dollar CAD, very, very little. And we know that simply because, well, the values, if we look at these values here, this is minus 16, cable has been plus 43. What these values tell us, it tells us, if you like, not the strength of the move, whether it's been a decent move, and 42 is an okay number. It's not the highest that we've had on the hourly chart. We've had them at 90s, we've had them at 3 figures, but it tells us there has been a decent move. What else is of note is, of course, we always look at the yen to see what the yen has been up to, and that has been sold off. What that tells us about sentiment, and a quick look over to see what is happening in terms of sentiment. And again, this is what I'm going to touch on a little bit later in our subsequent webinars, because sentiment is very mixed across the indices. And in fact, I came across something a couple of days ago, which basically, in terms of sentiment, it was much easier when everyone just looked at the S&P 500 and they looked at the S&P, they looked at the NASDAQ, they were moving together, and you think, oh, great, you know, sentiment is most definitely positive. But there's a lot of divergence going on because there's a lot of, rotation going on in stocks, but the bond market is becoming much more important to us to look at for what is sentiment and what is likely, you know, to be sentiment moving forward. So there is this divergence. So the US, the Dow futures are down slightly. The NASDAQ was actually up, and in a way, what I mentioned to David, that's up. They're up 45. It's almost as if for sentiment, there's been a shift. You know, everyone's kind of looking at the NASDAQ because it's growth stocks, and if the NASDAQ is doing really, really well, then you know the market seems to be particularly happy, as it were. Very quickly, what we've had in terms of fundamental news, I think it's practically all gone actually. In fact, it has. We've only got the ADP later on. The big news for the pound has been, as we can see here, GDP, and we've also had some news overnight in Asia. Right, to get back to the charts very, very quickly. So that's where we are at the moment. What I've done, going back to this, I'm going to be I focused on the dollar. I think David's got the yen pairs over there. What I actually did very quickly, rather than flick around different profiles. Oh, here we are. I created a profile just called the majors, just to give you a much better sense of this, if you like, these flows into the dollar across the different pairs. The flows are not equal, as we can see from the lines of the CSI, and the CSI is a very powerful indicator. Not only does it tell us where those flows, you know, where the flows have been the strongest, all that tells us, this, the hourly chart, is there has been selling of the US dollar. And what we have to try and establish, well, you know, which of the majors is going to offer the best trading opportunity. And what we don't want to see here, for example, in the dollar Swiss, you can see the lines moving in parallel, as we can see here. And when we look at the dollar Swiss over on the matrix and we see this value minus 12, that immediately tells us, well, it hasn't been a great trade there. That doesn't mean a trade isn't going to develop later on, because the other factor that you have to consider when you're looking at flows into individual currencies and currency pairs is basically the session that you're trading, what has happened in that session. And we know we've had some releases for the British pound, what is going on at the moment and what is coming up ahead. And the dollar CAD is a good example of that. You can see that the CAD is turning down along with the dollar, and that's reflected over here in the sense that it's at the bottom. But those values, the values don't really match what these values are at the other end of the spectrum. If there was if there was consistency of strong selling across all the dollar pairs, you would expect the values in these dollar pairs to be the same, obviously minus, but you would be in the same region that you have them in the pairs at the top of the matrix. There hasn't been, and you can see that displayed. If you just pull up, as I said, I've just got, I put 6, where's the 7th one, which is the dollar CAD. Here we are. Right, immediately we can see the first thing that strikes us about the dollar CAD is it's trading around what we call the volume point of control. It's in congestion. The lines on the chart have told us that it's in congestion because they're moving in the same direction. It hasn't had that, that strong move that we've seen that is going at the moment. I think it has, but it's not at the moment. It's at the volume point of control. This is volume price. This is volume and price over time. Congestion phases, they happen in all time frames, of course they do, and they're the point on the chart where there isn't strong divergence. So we have to be patient. And the dollar CAD is a great example of a pair that often, sometimes it may not do very much in this session, but once the North American session comes into play, then it will start moving. And it's logical because obviously New York is open and obviously the Canadian market is open as well. So on this one, we would say, yeah, you say awfully interesting, but let's wait and see what what plays out. Where are we at the moment? Then we've got the dollar yen. Now the dollar yen is it's a measures that you have to consider very much in relation to what is happening in the broader market in terms of sentiment. Sometimes it will follow the other pairs in the majors, and sometimes it's much more tied to, as I said, sentiment and really what the yen is doing. But if we look at the pairs where we have seen some action this morning, and as I said, this is from cable. Again, this is the London Open, the usual nonsense that we get at the London Open. We've had the volume point of control. We had the attempt to break higher. It ran straight into this resistance here at the R3, back to a retest of the volume point of control. And really the break didn't happen until this point here, which was just, it was, well after the open. And this is the trend higher that we've had for this pair, and it's been a really nice move for cable. Also, we can see here, this is the divergence that I talked about. You had the they kind of moving in the same direction. Then this is what you want to see all the time, because you're going to get a half decent move and a half decent trend. Now it's coming to an end. Well, if you just did price action and you just did candle patterns, the one candle that sticks out a mile here is obviously the shooting star candle at the top of this move. Doesn't have a massive amount of volume underneath it. It's actually slightly, well, it's just slightly above average. Certainly not of the volume of the candles going up in the trend, but it's still a shooting star candle. It's also hit the volume resistance. This volume resistance here that's in this band is part of the volume point of control. The point of control is the fulcrum. It's where, as I said, volume and price over time, and then you get the divergence. But along the way, you have these bands, if you like, which also act as support and resistance. Now, this is the outermost band. It got to this point and it's actually reversed off this point. And really what we're looking at here is this reversal, because the dollar index is actually in an uptrend on the daily chart. We're actually very much going against that sentiment in the slower time frame. Now we've got this strong signal purely on price base, which is the shooting star. It's also hit the volume resistance. Reasonable amount of volume underneath it. There's a lot of volume coming into this down. It looks like the start of a waterfall. As I said, I'm just looking at one chart. I'm just looking at the 5-minute chart. Possibly, it's a reasonable move. But when I move over here and I look at the euro dollar, again, another dollar pair, that seems to have been moving more strongly. So by looking at what the majors are doing, this is just the 5-minute chart, and you can see whether which is the strongest, where you're likely to get, a potential move, as it were. Now, would you be looking at the Aussie dollar just based on looking at this chart? Well, the answer is no. And why would you not? Well, it's just moving. It's chopping sideways. You haven't got any kind of trend. Yes, we did get a move away from the volume point of control, but it's doing nothing. It's going sideways. Doesn't mean it's not going to happen, moving forward. And look at the lines as well. They're moving sideways as well. Let's have a quick look at what's this one? This is the dollar. As I said, this is the dollar Swiss. what's it, it's a 5-minute chart. We did have a very, very nice move, a bit of consolidation here, again off the volume support from the volume point of control, and price-based support with the support and resistance lines that we have here. We had and it looks like it's attempting to move higher, but to be honest, dollar Swiss, I would, it's not one that I trade. In fact, I don't think I can't remember the last time I traded. It's just not one that that it can offer good moves. My own personal preference is actually the pound pairs, of which cable is one. This is just to give you an example of looking at the charts in this way. So we know the dollar is being sold, and to get so you can start to see where it's being sold most strongly, where it is at the moment, and whether there is likely to be a trade forthcoming, as it were. Just to get back to cable, because that's the easiest one to have a look at, and that's the sort of cleanest one. What you would do then is, this is my 5 chart profile for cable, and where I have the daily chart, the hourly, the 15, the 5, and also the Renko chart, because for the Renko chart, this is the one, and we've talked about it before, you'd actually use for your actual entries, holding on to the move and exits as well. And if you want to know a little bit more about how would you use that on a 5 chart basis with the Renko, that I did cover that in the last webinar, didn't I, David? Last Monday. That's up in YouTube, and so there's very specific ways that you would use the Renko in this way. Right, I'm just going to pass over to David. If you've got any questions on anything I've said, or David says, or you want to know a little bit more about either volume price analysis or the indicators, just drop them into the chat box.
Can you hear me now? Yeah, loud or not? Okay, fine. Sorry about that. I still can't hear myself in my headset, but never mind, I won't worry about that. As long as you can hear me, that's all that matters. Just drop this out of the way, and there we go. I've actually pulled up euro dollar. I've pulled it up for a specific reason, well, 2 reasons. First of all, to show you there's actually a nice trend developing on it, because we've got heavy selling of the euro, and the reason that it's interesting is because over on this side, I've got the 60-minute currency strength indicator, and you can see here the strength of selling in the euro, but we've also got selling of the US dollar. Whereas if we go over onto the faster time frames, onto the currency strength multiples, just for a moment, what's driving that clearly is this heavy selling in the euro, really strong selling in the euro. You can see it over here. This is on 10, this is on 15. So even though the 2 pairs on this particular time frame, they are starting to reverse now, so we're starting to see buying of the dollar coming in here, and that's going to help if the selling of the euro is continuing, obviously. And the same here, we're just starting to see that take effect here. We're starting to see buying of the dollar, this heavy selling of the euro. But what's interesting is when you look at it on the slow time frame, which is really the point I wanted to make over here, you might look at this on a slow time frame, say there isn't much trend going on, and there wouldn't be, because if you go over to that very slow time frame, what you would see there predominantly is much more congestion than obviously a strong trend. And yet, when you come down to these very fast time frames here, on 15-second, 1 minute, 3 minute, 5 minute, you are seeing a decent trend develop there, and it's certainly tradable. So it all comes back to this issue of selecting the time frame that is appropriate to what it is you're trying to do. Because if you are on a slower term time frame, if you're on a 60-minute, then clearly you're not too fussed about this. It's maybe a minor correction somewhere or the other on your chart, but other than that, it is of no significance. So if you're on the hourly, the 4-hour, the daily, whatever, it's of really no great consequence, because if you go down onto the daily chart, the one at the bottom here, just move that out of the way. There we go. You know, this is the price action that we've actually seen thus far, which is hardly significant, certainly if you're trading this much slower time frame. But from an intraday perspective, and certainly looking at it from a CSI perspective, it just makes you aware of the focus of the time frame that you are trying. What is it you are trying to do? Are you trying to scalp this market? Are you going to be in here for a few minutes? Or are you looking at this as a longer term reversal opportunity, in which case you've got to wait for the setup, etc., etc. And when you look at these slower time frames as well, and you see things moving in the same direction, it doesn't automatically mean that there will not be something in a very fast time frame such as this. It just means that in your time frame over here, there isn't a great deal going on. So as far as we're concerned, on a 60-minute time frame, what are we looking at for potential reversals? Well, clearly the pound is still climbing on that time frame. The yen has reached oversold down at the bottom here and is starting to kick higher maybe. So there might be an opportunity there to look at that in the future. If you're an intraday or a slower term trend trader, what are you looking at? Well, the Swiss franc is selling off, the dollar's selling off, the euro is selling off. We're starting to see the commodity currencies start to climb a little bit. So if I flick this over onto, let's change over to New Zealand dollar. In fact, let me go over to the same as Anna. I've got the dollar workspaces set up here. I've also got them on TradeStation. I'll pull that up in a minute as well. This is basically, sorry, wrong one. Where are we? Currency majors matrix. Here we go. This is basically spot. So this is the spot pairs we're looking at here. And I've got a 15-minute CSI over here. So you can see the heavy selling in the euro. The dollar is very oversold, starting to kick up. Starting to see that move develop here as well. That's on 15-minute. That's on the euro dollar. And in terms of the moves in other markets, and it just gives you a great perspective. When you have a matrix like this set up, it tells you many things, but it also gives you an inverse perspective, because when you look at things like, I mean, these two I've got alongside, so clearly, there is generally an inverse relationship between the two. So if you're trading euro dollar and you have the dollar Swiss alongside in similar or the same timescales, doesn't really matter. It just gives you an inverse perspective. For example, at the moment, you can see the euro dollar on 15s coming down to the volume point of control. What do you expect to see? Well, possibly some congestion build as a result. It doesn't automatically mean that that is going to transfer across to the dollar Swiss or vice versa, because what's happened with the dollar Swiss, just pop that up full size, make it a bit easier there. We've already had, if you like, that sort of piece of price action around the volume point of control. What's also being created as a result, because the pair has been there for an extensive period, it has created this channel which you see a lot with this indicator. This is the accumulation distribution indicator. Because the price action is paused there in congestion, it has built these very strong levels of either support or resistance and create this channeling around the center, which is the fulcrum of the market, which is the volume point of control itself. So it gives you very clear levels against which to either consider when the market is breaking away from this region, or indeed where to put your stop losses. So if you were looking at this for a stop loss, where do I put my stop loss? You'd certainly be looking under this level, possibly a little bit deeper down here, assuming that fits your risk and money management rules, because then you've got this huge wedge of both volume in terms of the volume histogram and also price-based support. Should the market reverse against you, you've got all this above you that it's got to battle its way through before it gets down to your stop down here somewhere. So when you're trading congestions, it doesn't suit everybody, because you've got to be patient and wait for them to break away. But going back to the point I was making earlier about having the matrix up, it just gives you, if whatever pair you're trading as a major, it just gives you an alternative inverse perspective in terms of dollar CAD. You're going to see selling of the dollar here, and it just gives you a nice perspective to view the indicators, to view the volume profile, to view the price action. Where is the chart in terms of the volume point of control, and so on and so forth. Just pop this up full size. I mean, again, this is another nice example of a breakaway from a congestion zone. We were trading around the volume point of control here for some period. The nice thing with NinjaTrader, by the way, is it prints real-time data. So wherever you are in the world, this will appear in your local time. So this was the London Open. Basically, this was European Open here at 7 o'clock. So throughout the overnight our time and into the start of Europe, it was pretty much congested. Really nice resistance level building above, the volume point of control here, and a really nice solid platform of support in here that was tested several times. Hold on a minute. Apologies, someone on the phone. My daughter, I think. So it just gives you a really nice area to consider for all those different aspects of getting into the trade. For example, if this is a congestion phase, we've got the resistance above, we've got the support in below on the accumulation distribution indicator. As the market starts to break away, you're then looking at, well, where am I going to look to maybe get in? What am I comfortable? Where am I comfortable getting in? And what is the level at which this is going to break? Give me a feeling that the market is going to continue lower and give me a good trading opportunity. So it gives you all those sorts of aspects. And of course, that will be an inverse of what is going on the other charts, because that is in terms of selling dollar, and in terms of the other charts, it'll be in terms of buying. They'll be rising and this one falling, and vice versa. If I pull up this is on a similar sort of picture this is on TradeStation now. This is being driven by interactive brokers. This is the what's called TradeStation Global, which is TradeStation 9.5. If you have an interactive brokers account, you can hook it straight through to TradeStation now, and you can have the benefits of not only trading a deep discount brokerage, you can trade everything obviously through interactive brokers, there's no restrictions, but also in terms of the charting of radar screen and TradeStation itself. So down the left here, I've basically got, again, the currency futures, if you like. This is the futures matrix. So I've got the 6A, which is the Aussie dollar, 6B, which is cable, 6C, which is CAD dollar, so it's the inverse on futures. So they're all pointing in the same direction. In other words, this is Euro dollar, the 6C, this is New Zealand dollar, which is the 6N, and this is the Swiss dollar, not the dollar Swiss. So again, it's the inverse of the spot markets, because everything in futures is traded against the dollar as the counter currency. Other than that, it works in exactly the same way. But what's great is that once you have radar screen on here, and when we first started, this was all blue. In other words, this was all selling of the dollar. That selling of the dollar has now reversed. You can see it here. This is on 5-minute CSI. You can start to see we got down into oversold. Now we've got strong buying coming in. And that's why these are all rotating. They were all blue. They're now starting to rotate through to red pretty much across the matrix. So in other words, we're starting to see that dollar buying ripple across the complete complex in that way. I've got the trend monitor here, which has got the trend line and the trend bar on it. And then I've got the quantum trend dots on here as well. And over on the right-hand side, I've got the dynamic volatility indicator. And that triggers in real time, tells you exactly what's going on. So for example, if I click on the 6E, which is the euro dollar on 5-minute, sorry, big pardon, on 15-minute, just click that large size so you can see that a bit better. What it was actually saying was, I think it was 9 bars ago, it said there was a volatility trigger. That was this one. So if you see that coming up on the radar screen, it's just a terrific way to just give you a heads up straight away. I've got a volatility trigger. Is it something that's tradable? Have I got a position on that? Do I need to think, get out? Do I need to partially close out, scale out, whatever? But it just gives you a straight heads up as to what is happening. I've got the volume point of control on here, and you can see on this particular time frame, we're getting back down to that particular region. So the chances are we're going to see some congestion build. It's not going to drive straight through there. Probably see some congestion build at that point. So that's on TradeStation. Just where are we going? Let's just drop that out of the way, if it will. There we go. So now we're back on the majors. Let's just see what's going on in terms of sentiment. It was pretty mixed earlier on. It wasn't great, really, not really going anywhere. This is on the 3 US indices on Globex. This is what they're doing at the moment. So that's the YM, pretty much it's London time here. Just looking over, I've got TradingView. The FTSE 100 is kind of down a bit. It's pretty flat at the moment. So it's really reflecting what's going on here as well. So that's on the Dow. This is on NASDAQ, which has been, as Anna said, a little bit more positive, a bit more bullish. Got some decent volume coming in here now. So starting to drive it higher. But in terms of the daily, it's very much stuck in a range. It's almost creating a pennant. You've got almost a triangular pattern building here with higher lower tops here, falling down to this level here. So, you know, it's not looking particularly strong, whereas the other two are up near, you know, all-time highs and trying to break higher still. That's the ES, which is the S&P 500, which, as Anna said, was usually the benchmark for everything. And it now seems to have rotated a little bit away from that and into the NASDAQ. Let's just see what's happening in terms of the currency strength multiples. There we go. This is on, I've got 1 minute over on the left, 5 minute in the middle, 10 minute and 15 minute. So again, it's just deciding what it is you're trying to do. Right now, if you're out on the 15 minute, maybe out to 30 minute, this is set up for a reversal. We've got the pound up here at the top, starting to sell off. Dollar's rising quite nicely. That is being reflected over on 15. Same here, the dollar's rising. So in terms of a potential reversal, that would certainly be one that you know, my eye would be drawn to. You're starting to see the bottoming out right way back down to 1 now. This is the euro that over here is selling off really strongly still. And yet on the 1 minute, you know, there's the buying coming in. Here we start to see the buying coming in and starting to kick up here as well. So it all comes back to this whole principle of what is it you are trying to do on your chosen time frame. Just go and have a quick look at the currency matrix over here on the matrix multiples. I've got these on similar, I've got 1, 5, 10 and 15, so similar sort of scenario. This is what we're seeing on the euro right now. There's buying coming in, and that's why you're seeing it there reflected on the matrix. And what we're looking for on the matrix constantly, as indeed really anything that we do, is we were looking for whether the sentiment towards that particular currency that we're trading is reflected across the currency matrix. In other words, are we trading with the universal flow of money? Is the sentiment towards the euro on 1 minute, is the market buying euro on that time horizon? The short answer is pretty much yes, other than Euro Swiss, but I guarantee if you looked at Euro Swiss on the CSI, that might well be traveling in the same direction, hence the reason that these are much stronger. Now it's jumped up to the top there. And basically what you want to see in terms of sentiment is you want to see that all these pairs move up to the top, as indeed they are doing at the moment. Now, if that is going to be reflected across onto your 5 minute, it isn't at the moment. Clearly, these are down at the bottom. But if this sentiment is going to come through here, then what you expect to see is all of these start to lift up and move up the chart pretty rapidly, if that is going to rotate through. No difference in terms of looking at the 10 minute. You know, there's a full house there, and over onto the 15 minute, equally the same. So what this is telling you is these are very oversold at the moment, but the sentiment on one is starting to shift. Now that may be enough to ripple through into 5, 10 and 15 ultimately, but if it is only a minor pullback, then that's all it is. And that's the power of volume price analysis, because what volume price analysis will do for you, and it's a huge part of the VPA methodology analysis in the technical module on the education program, is to explain how you can interpret using volume whether that reversal is a true reversal in sentiment. In other words, what we're witnessing now on the euro, is this a reversal in sentiment from bearish to bullish, or is it merely a minor pullback within the context of the slower time frame charts? And the reason it's so powerful is very simple, because most traders struggle to hold a position once it's in profit, because your emotional response is to get out. I've made some money, I've taken a load of losses, I've taken small losses, and suddenly I've got this, you know, I've got a decent bit of profit here, I'm going to take it, and you close out at a relatively small profit, which is fine, you've made a profit. The problem is it doesn't outweigh all the small losses, and that's the issue for most traders. And that's why it's one of the most powerful applications of volume price analysis, is to interpret on the chart whether what we're seeing here is ultimately going to reflect in here and here and here. Because if it doesn't, if this is just a minor pullback, perfectly tradable if you're a scalping trader, there's plenty of money to be made in there. But if you're trading this slower term, anything less than 2, 3, 4, 5 minutes, then you need to know that, because what you need to understand is whether you're going to hold that position through the pullback, or whether indeed it is a pullback, it is a true reversal from a primary higher to a primary lower, or vice versa. Just go back onto the charts again. There we go. And in terms of the 60 minute, you know, there's no great change at the moment in terms of what we're seeing. Let me just pull over the TradingView, if I may, for a minute, just to highlight one or two things there. We are working flat out to get these indicators available for you. This is the latest which has come out, which is the volume point of control. Just pop that up full size. There we go. So this is the VPOC, which I'm sure you recognize, but this is it on TradingView. Currently on beta test. Haven't had any major bugs with this one, but it's here. It's working. This is the volume point of control. I can't decide on the color sort of format I like at the moment. This is the latest one, but I'm still not entirely happy with it, but anyway, that's a minor point. And you can see all the various levels, low volume nodes coming up to low volume here. We've got a lot of volume under here, and it falls away quite dramatically below that. That's on pound yen on 5 minutes. This is on the Aussie dollar on the same time frame. And where are we going with that? Well, it looks as though we could be going all the way back down to the volume point of control. Volume is building through here down to that fulcrum point there, and move through this low volume area fairly easily. I haven't got the volume on here at the moment. I just wanted to keep it clean. This is on dollar CAD on 5. Here we go. Starting to break away from the volume point of control, coming up to a low volume node here. Should go through that fairly easily with a bit of luck. Then we start to get into higher volume up here, lower volume, and on up the chart we go. So that's the VPOC. That's the Apple on the daily time frame. So that's the VPOC. Just to keep you pace with that. In addition to that, I've shown you these before, but you might not have seen them if this is your first time. Just scroll that out if I can. No, let's come back to that in a minute. That's the heat map, which you can use in multiple time frames. It's very different to the heat map. Just click that over there. It's very different to the heat map. Come on. No. This is why we have to test these things all the time, make sure they're working and there's no bugs in there. But this is the one of them at any rate. You can see the time frames over here, but you can actually set these yourself. These are not prescribed. You have the chance to allocate whatever time frame you like to this particular table. It's unique to TradingView. It's not available on the other platforms at the moment. So you will be able to set this up according to whichever approach to trading you take with your scalping trade, a slower term trader, whatever it may be. So that's the VPOC. What have we got here? This is the currency array and the currency matrix, which we've had on test for a while now. So they're all working perfectly. And on the matrix, just to differ from the one you saw earlier, you can see up here, we've got the all-time high and the average and the all-time low and the average down here. It's just an additional feature because what it tells you, one of the things that was missing from this indicator is this number here. What does it actually mean? Does it mean we're at an extreme or getting to an extreme, approaching an extreme? Whereas with the CSI, you have the 80-20 top and bottom to give you a feel for when a currency is overbought or oversold. Here, you didn't have anything in terms of a metric to give you that sort of level. So what we've done is we've created this here. You can see where we are at the moment. The average is around 12 and the all-time low is around 18. So we're way off that there. So there's some way to go on that one. Similarly, at the top here, we've got 16 all-time and average 10.6, whereas at 7.6. It just gives you a flavor of where that particular currency pair is, where the extremes are. Are we at extremes or are we well below? And in this case, clearly, we're well below those two extremes. And then you've got the currency array over here, works in exactly the same way. We've got currency pairs building up to overbought and oversold in the column on the right-hand side. And then they're ranked accordingly. And you get this great visual array of strength, the strength of currency pairs, which are moving most strongly, which are moving up to join them, and the general sentiment towards that particular currency across the matrix. We're working on the Renko, which has been interesting, to put it mildly. And funnily enough, I think we're going to end up with two versions of the Renko. I won't bore you with it now. I'll show it to you next week. I literally came out out from development yesterday, and I haven't even had a chance to play around with it. But there are two versions of it. I'm just saying, it's very interesting, and I'll show it to you next week once I haven't got a picture. No, not easily available. But if you're in the VPA chat room, if you're on the program, I will pop a picture up there for you of what it looks like, because it is quite fun. Where are we going with euro dollar at the moment? Looks like it was a little ramp higher. down on the volume point of control here on 15. So, you know, expect congestion. Whenever we hit this level, whenever we get anywhere close to this level, what are we expecting? Congestion. And it doesn't matter whether it's on a 1 minute or a 15-second or an hourly or a daily. That is what you expect to see. It's as simple as that. Yeah, I'm just going to pass back to Anna. Hold on a minute. Hold on a minute.
Oh, hi. It's just a quick comeback on the profile for cable. We left it, well, looking as though it was going to reverse. Certainly, if you had the 5-minute chart, as we had earlier on the profile for the majors, we looked at the we saw this the shooting star candle. As I said, not for it to, the shooting star candle on its own, like the hammer candle that we have down here, this is opposite, if you like, at the other end of a trend. It's a strong signal of itself. You know, traders who just use price action, that's one of the candles that they look for. What it does, you know, because what's happened is, in terms of price action, the prices the buying has pushed the price up, and then it's collapsed back down on itself. So obviously weakness has come in as the candle has closed. So, you know, of itself, you would say, yep, that looks like a potential reversal signal. What makes it more powerful is when you look at what is the volume associated with that, with the candle. And we looked at it, and it looks a little bit, you know, it's above average, but you know, for a candle with a wick of that depth, if that, you know, if this volume had been up here somewhere, if you look at the volume, and we are now in the London session, as I said, you will see this voluming, you know, above the average line, because there's more participation. You know, the Asia volume then gets sort of, you know, shrunk. It looks as though it's shrinking. It's not shrinking. It's just that you've got so much volume coming in London. So that is, but again, this is just a first signal. Now the next candle is quite interesting because it is a little up candle, and it's got a little wick to the bottom of the candle, but the volume is even less. So if you like, that is kind of confirming what you are seeing there. To get back to my first point, that given this is London and this is a, you know, a very deep session for liquidity, it would have been nice to see that you know, a lot more volume under there. It has still reversed, as we can see here. But what it also does is everything slows down. So normally a reversal from a primary, this is really a primary to a primary. You know, there's no attempt at congestion, as it were. If we'd had more volume under that, I would have expected that to, if you like, to fall much more strongly than it has at the moment. But that is one time frame. You know, you don't really, you see a signal on one time frame. You really need to go and see what is happening on a slower time frame to put some context into it. And actually, it's only when you get to the hourly chart, and I'm actually going to put it up here with the other indicators on, and what has happened. And that's, you know, is, first of all, we have a volatility candle. This is this move higher that we've seen, this very strong move, but it triggered a volatility candle, which is this little purple arrow top and bottom, because that move, that range, that is outside of the average true range for this time frame. What tends to happen is the price will then reverse back into the spread of the candle. So if you are on that faster time frame, looking at the hourly, and you see the trigger on the slower time frame of something like the volatility, there's no reason, it's a good enough reason to come out of this up move. It's also hit the volume point of control on the hourly chart. And we looked, as David was looking, saw David's screen when you're looking at the euro dollar. What does the VPOC tell us? The VPOC tells us that we can expect a degree of congestion, certainly pause, while, you know, the market kind of, you know, takes stock and decides whether it is actually going to, you know, what is the direction what is the direction going to be? And if it happens just before a session, a new session, a session crossover, or a new session is, going to start. I mean, we are, what are we, 11:30 at the moment, a little bit early for in New York. Certainly the Forex session for New York is about 1:30, David? 1 o'clock, 1:30. Then, of course, you've got the Wall Street Open, the physical open, which is at 2:30. So you've got to take all these other factors into consideration. So looking at this pullback, and then going right down to look at a non-time based chart, which is the Renko. This is the potential reversal. This, call that the primary trend. This is the primary trend high. Then you've almost got a V shape there. You haven't even got any congestion, that sideways movement that we saw there. It's very, very, it hasn't really kind of taken off yet. It hasn't taken off primarily because there was enough volume to cause a reaction, a pullback, if you like, but really on that kind of size of candle, you really want to see something a bit more. Doesn't mean that's not going to carry on high. Thing about markets at the moment, as you may have noticed, is a lot of volatility has calmed. Not in some markets is quite elevated, but in Forex sometimes things just take a long time to develop. We know that from the matrix values on the hourly ones. When you get those 20s and 30s, either positive or minus. Yes, there's been a move, but boy, oh boy, even on a 5 minute, you look at a 5 minute chart, it takes hours. It takes 3, 4, 5. Sometimes it can take because there isn't by volatility. I mean, there's no momentum. Everything is much slower. It takes time to develop. So this is the Renko. As I said, the video from last week explains in more detail how the Renko is great. It's very, very good. It's excellent for entries and for keeping you in a move, also for a re-entry. With an exit, my own suggestion is that you possibly look more at what you're seeing on the time chart and look at something like a candle pattern, support and resistance. Is it hitting a particular, an important level? So it's a combination of all these little factors that you have to put together to, really, first of all, to spot an opportunity when you're in an opportunity, to keep you in there, and then to help you exit that opportunity. I said, non-time based charts, time based, candles, candle patterns, the volume, and the all important support and resistance. With volatility, yes, no, if there is. This goes back to the degree of momentum that is in the market. If the volatility is triggered when there is a lot of momentum, we can measure momentum using tick charts. We don't have them on MT4, MT5. We have them on NinjaTrader and a TradeStation, and that is tick charts measures activity. When you have a lot of activity and a lot of momentum going through the market, you will get multiple candles, volatility candles, but eventually it tends to be maybe one or two. The second candle will almost always go back into the spread, but if there's momentum behind it, a lot of momentum, then it will carry on. Generally, as I said, we haven't done the actual, we haven't gone back and done the statistics on it, but from, if you, the traders on our program will tell you that the volatility candle, certainly on the slower time frames, not necessarily the, if you're on, you may see them subsequent ones on the faster time frames, but it's the ones on your benchmark time frame as is here on the hourly one, which carries a lot of weight, then you should really must pay attention to the ones on the slower time frame. So I hope that answers that question. I'm going to pop you back to David, and we'll be back later. As I said, we've got the indices and we've got the stocks later on.
Hi everyone, welcome back over onto this side on NinjaTrader. And just to wrap up, just on Eurodollar, you can see it's starting to rally higher. So if we go back to what we were looking at before, which was the currency matrix, there we go. That's it. What we're seeing is we are starting to see that, you can see that on the 5 minute now. We had it on the 1 minute. It's probably changed again on the 1 minute, but that's the nature of the business, because whatever time frame you're trading down at the fast minute, the fast time frame, that's what you like to see. But that's what we're seeing. Here it is on 5 minute. We've now got that transition, if you like, from 1 minute has rotated through to 5 minute, and ultimately, if it carries on further, that strength develops further, then that trend is going to move out to the 10 minute, and ultimately all the way across the 15 minute, and all these will also start to move up as to follow suit. So it's just a classical way of looking at charts, of looking at the indicators, using everything together to get a feel for what is going on in terms of sentiment towards the pair you're trading, whether sentiment is universal for that, and whether indeed it's changing through from a primary to a primary, or is it merely a pullback in a longer term trend, which is going to be reconnected in due course. We're going to run because we've got a few things to do. So just to point in the direction of where all the bits and pieces are, this is where you'll find all the indicators over at quantumtrading.com, MT45, NinjaTrader 78, TradingView, and also TradeStation. TradeStation is both versions. That's either 9.5 with the interactive broker feed, or TradeStation Securities, which runs on TradeStation version 10. Whenever you invest in the full package, you will also receive all future indicators we develop free of charge, but you're more than welcome to buy one or a handful, and you'll always get a credit. Whatever you spend with us, you'll always get a credit against a future purchase. So if you buy one indicator and maybe want to upgrade, or a couple and maybe want to upgrade to full package, we will give you a full credit for that. So you never, ever lose out. Or indeed, if you want to transition through to the funded program or onto the education program, the complete Forex trading program is here. And as Anna said, in the last few months, we've bolted on the funded program. You trade our money. It's as simple as that. The reason we've done it is because we have a lot of students coming through from the education program, and it gives them an upgrade path, or it will give you an upgrade path if you join the Forex program, to basically put that knowledge to use, to profit from it, because on the program, you're trading our money, so it's risk-free. You earn a return in terms of profit. So you start at one of the evaluation accounts, which are either 5, 10, or 15. Just click on that, take it over there, it's easier. Let's go down the bottom of the page here. There are 3 levels you start at, that's 5, 10, or 15,000. You decide, it's up to you. And once you've passed or achieved a profit target, it's a very realistic profit target on each of those levels, we then multiply that amount by 4. So if you start on 15,000, that takes you up to 60,000, and thereafter it doubles, so you go 122, 44, 80. You earn off that all the time. You're earning in profit. 35% of the starting level evaluation comes as a lump sum back to you as a kickback. And as you move up into the what we call portfolio manager levels, the next level up, you can earn at 50% of the profit you generate. So you're getting that then paid on a monthly basis. On the evaluation stage, it's spot currencies only. It's the 28 pairs. But if you move up to the portfolio manager levels higher, the markets you can trade, we broadened out. It was something that a lot of customers on the program asked us for. We've delivered on that now. So you can trade S&P 100, you can trade $30 tech, DE on the German market, and also you can trade gold on those sorts of levels once you're on that particular level. So it's broadened out. Yes, there are risk and money management rules. Of course there are. But it's a great program, and it really enhances the education program, which is, as we say, the complete Forex trading program. That's what it is. It tells you explains to you how to trade this market with confidence. And you have all the modules here. You've got psychology, fundamental, deep dive into technical analysis, VPA, Sorry, that's relational analysis, deep dive into VPA and the mechanics of trading module. And then you've got all the other videos down here as well. There's about 450 lessons in total. There are between 250 and 300 hours of video in this program. It is huge. Comprehensive would be an understatement. And in addition to that, you can join us in the VPA Traders chat room, which Anna and I host every day. We're there to answer questions, or you can have discussions with your fellow students and so on and so forth. Finally, just to wrap up, you'll find Anna's analysis over here, annacooling.com. You find all the books here up on Amazon. They're in Kindle and in paperback, and they are all there and available. That's it, we're done. We will be back at 2:15, I think it is, and then there's another one at 3 o'clock. So we will see you later on. If not, enjoy the rest of the trading day. Thanks very much, Steve, for coming along today. Hope you've enjoyed it. We are going to run. See you again soon, and bye for now.